Hi and welcome to this video on the value range tool. And what the value range tool does is that basically it assists us in identifying value on a price chart, right? So I'm going to go through how I use it and how it's created as well, right? So pretty much how we create the value range tool. It came from the Fibonacci retracement tool, right? And it's something that I created. And what I realized is that what you really need to just focus on, rather than Fibonacci, is just whether you're at an fair value, under fair value, or over fair value, right? You're basically buying at retail prices. And all Fibonacci is if you don't know Fibonacci retracements, is that traders will look for pullbacks into certain Fibonacci ratio levels. So for example, right, you have let's say for example we're taking a low to a high, right, and let's say this is all we saw. Let's do it from here to here, right? So we saw that low to that high, and we want to be a buyer of the euro. So what we're looking for is a retracement. And what Fibonacci retracements the Fibonacci retracement tool does is it identifies areas on a price chart where traders would probably look to buy, right? And potential value, right? And a lot of Fibonacci traders don't really grasp this concept, right? They just think that the 38.2 is a magic number, the 61.8 is a magic number, the 78.6 is a magic number, and it's not, right? If you're looking at the low to the high, right, then what you're buying is at really a discount. If buyers are unwilling to buy up here, where are they willing to buy and push prices potentially past this high, right? Because this is what we know as an expensive area. So are they looking at a 30% discount, 38.2% discount? Are they looking for a 61.8% discount, a 76, or pretty much a absolute bargain, right? And 100% discount, right, on the euro, right? Now, one of the problems with Fibonacci is that one is that obviously it's more sold as magic numbers from which prices should react, right? And prices do react from Fibonacci, and it's really just because it's a self-fulfilling type prophecy. There's lots of traders that trade Fibonacci levels, so you're bound to get some sort of reaction or some sort of demand around these zones. But with Fibonacci, you're always going to find a level where the 38.2, the 23.6, the 61.8, the 78.6 lines up with, right? And in my opinion, Fibonacci isn't the be all and end all, right? It has its uses, most definitely, but it's I found a much easier and simpler way to really just identify whether you're buying at value, undervalued, or really just, I wouldn't say overvalued, but above fair value, right? So what I did was I created the not necessarily hard to create, but I thought that I would look at the value range tool. I would consider the value range tool, right? Now, like the Fibonacci tool, right, all we're concerned with is above fair value, and below fair value. That's it, right? Now, we don't know where prices are potentially going to range from, right? We know there are certain highs and certain lows that occur within the market, and prices do range within highs and lows, right? So let's go forward a bit, right? Let's start going forward, and let's say, for example, prices were contained within this range here. We know that this is an area of demand, as prices had made this higher high, higher low, and potentially a higher high. Not the best area of or the most a brilliant area of a higher high, right? Technically, yes, we did make a higher high, but this is a bearish candle. But if we're looking at it from a just a daily perspective and the amount of pips that it moved, right, this is definitely a decent level of demand, right? So we put demand zone here. So we know now that if prices are in a range, right, and this is all we saw, right, between here and here, anywhere buying above here, so the 38.2% Fibonacci ratio would have been around here, in the 23 you're buying above fair value, and the 61.8 and the 78.6 is below fair value, right? Now we know that this is obviously the best area to buy, and then prices start going to the upside, right? So continue going higher now, right? As prices break to new highs, and what we want to do is wait for a bit of a pullback, right? Now we don't know whether prices are going to range between here and here, or new demand zones that have been created. So one was created right here, one was created right here, as we had a higher highs and higher lows are being created, and as we know, higher lows are potentially the strongest areas of demand. This area was an area of demand, but as we've touched it twice, you don't necessarily have to put that on there, right? So this is what we have, right, as our areas of demand. And let me just get rid of these. So we don't know whether prices are going to range between this low, right, to this high, or prices are going to range between this low and this high. So let me put the value range tool, right? Or we can also put this low to this high. When you have prices pretty much this close, this low and this low, this close, you don't necessarily have to put prices, the value range tool on. It's optional. Don't clutter your charts too much when you're adding the value range tool, because it can get quite a bit messy and complex. But what you want to look at is probably just the major swings, and this I'd put it on as we've only got 3 levels, right? So at the moment we know that prices are above fair values no matter which area prices may range from. We also want to align or look to potentially align fair value with areas of a demand zone, right, if possible, because we don't know. Again, there are traders that are looking for that are potentially looking to trade this area to this area as the low to the high, or this area to this area. So what we're looking for is just some sort of confluence within the demand zone. We haven't got any demand zones here, but if prices do decide to come back, right, as prices break to new highs, we move these higher and higher. Matter of fact, as this has created a new high, we can put a demand zone here, right? And we can also put a value range tool here as well, right? So we've created obviously a higher high. Now prices could range between this 1.106 level and the 1.139 level, which is probably around about 300 pips, 350 pips or so, right? So we could see prices range between here and here. And if prices do range between this first area of potential, bargain area, we know that we're buying below fair value, right? This is all we're really concerned with. We're not concerned with 61.8% Fibonacci's. We're not concerned with the 78.6%. We're just concerned with demand zone. This is a bargain area. Look for structures on the lower time frame, right? If produces it produces structures, and when I say structures, I'm talking about levels of support and resistance within this area of supply and demand. And then we look to potentially buy if we want to be a buyer. But we also have to recognize that of the overall picture, we are buying at a potential above fair value area, right? If we were looking at this low to this high, right? But if you have potentially enough pips, fundamentals and sentiment are on your side as well, then as long as the range is around, I would say 200 to 300 pips, 300, I would say 200 pips, give or take of, 10, 20 pips at absolute minimum, right? So I want to look for at least 200 pips for a range before looking to buy, if I'm looking to buy at highs. And I also have to believe that prices, right, can potentially go higher, or at least go up to this area, right? But the most optimum level, if we're looking at the low to the high, would be anywhere below fair value is what you're really looking to buy at, right? But again, we don't know whether price is going to range from here. So the first potential bargain area is going to be that demand zone right there. And let's see what happens. We get a reaction, right? And prices do move up, and create new highs. And as we create new highs, what we do is we move all of our value range tools there. We have a new demand zone as we created a new high. Just do it from there to there, which coincided with this demand zone, right? So again, we're looking to buy at this area right here. We have touched this area once already, so we could see a weakness. The more times an area of demand is touched, the weaker it becomes, right? But this looked like a decent level, and also again, just take into account sentiment and fundamentals. So because we don't know what was happening at the time, right? But we do get a reaction here, right? We got from this low to this high. From an intraday time frame perspective, this could have been enough pips for you to, get into. This was again 1.16 to 1.12. So we're looking at a decent amount of pips, 100 maybe 40 or 50 pips or so, right? So there was a decent amount of pips within that. And really, this video isn't necessarily about looking to backtest this strategy as far as it being, a winning strategy. It's about how to look at the overall picture, right? And where you're looking to buy, and if you're looking to buy, and where you're trying to identify levels of value. And as you can see, this was a fair value area right below the first area where we would have considered this to be a bargain in alignment. Prices did, react off of that, and obviously went down. We don't know what happened here from a fundamental perspective. So we keep going, right? Now we know that we're buying into an area of below fair value if we were ranging from this level, and this level. This is the optimum levels that we're looking to buy. Now we want to look for potential demand zones and look to buy areas of demand, right? So we keep going forward, and as now we've created really this area of demand. So we've created, price have come down, then we've created a higher high, higher low. We've broken past this area here, right? This would have been an area of supply. As we've created lower highs and lower lows, right? So one of our odds enhancers is that we have to take out a level of supply, right? This demand takes out this level of supply, and this creates some demand, right? And really demand is between here and here, right? So let's get rid of some of these. So as we now create a new demand zone, now we're not too sure whether prices will range between this low or that high and that low, right? So this is where we want to look to place our value range tool, just to identify potential value, right? So let's continue forward, right? And again, prices did come down to this area, right, of fair value, right, but we didn't have a demand zone in there, so we're not looking to trade in this area. First and foremost, we're only looking to trade within levels of demand and then see where we are in the bigger picture. Are we at fair value or below fair value, or maybe just above fair value, right? But obviously the higher above fair value we are, the less we really want to look to trade that level. So here we go, above fair value, right, and prices are really kind of contained within this range here, right, between this low or this high and this low for now. And as you can see, right, prices came down into this demand zone here, right, and reacted, right, because we're buying below fair value within this potential value range, right, and let price tell us where the value range may occur. We're just basically trying to put the probabilities in our favor, right? And again, the value range is just an agreed price between buyers and sellers, right? So at the moment, price is contained between the 1.146 level, and potentially this was a bargain in the past, the 1.08 level, right? So we should stay within this range until proven otherwise, right? Again, prices come down, we react, etc., right? Come down to this level again, and let's see what happens, and then we react, right? One touch, two touch, right? So what we're doing again is just understanding where we are value range wise, right? If you're looking to be a buyer, we're marking out levels of demand, right? And obviously you want to try and get rid of, you know, certain areas of demand as well on the price chart. Don't make it too confusing. My apologies, right? And these are the best areas. See, with Fibonacci retracement, it's confusing because you have, again, the whole concept of trading with Fibonacci is that, you know, you're looking at, you know, different numbers. You're looking at 38.2, you're looking at 61.8, 78.6. At some point, you're always going to have a Fibonacci ratio that lines up with a level of support and resistance, or supply and demand, right? But getting into, I don't want to necessarily get into how traders trade, but it gets very specific, and it's really, I feel it's unnecessary. This is a much easier, clearer, more defined way of trying to find value, trying to find, you know, whether you're trying to buy, potentially buying within a certain range, in a potential range, and where to really identify if you're buying a potential overvalued or undervalued area, or above fair value. I keep saying overvalued, but an above fair value area, right? So let's continue going forward, and let's do a bit more analysis, and I'll also do some analysis from a supply perspective as well, right? So you can get, you know, a bigger picture, right? So we continue going higher. Let's continue this for a bit more. So once we go make new highs, right, what you want to do is drag all of your value range tools, keep going higher, right? Here we go. Then what we want to do is look for new demand zones. So we've created a new higher high, higher low right there. And now prices could obviously range between this area, between this low and this high. And again, we're just looking at being buyers, right? Not looking at selling. So all prices could range between this area here and this area here, or this area here and this area here, and so on and so forth, right? I don't necessarily, you know, make the charts a bit, you know, too messy, right? Now, as we've added a new demand zone here, prices could range between this area here and this area here, right? Now, if we actually made that into a Fibonacci retracement tool, this is what it would look like. So you'd have traders probably looking for some sort of pullback to a level, right? Either the 38.2, 61.8, etc. Again, we're just trying to keep this as simple as possible. Are we buying at fair value, below fair value, or above fair value? So let's turn this back into our value range tool. Right, and we're looking for areas of demand, right? First of all, and then looking for an area and identify an area of value. So let's keep going forward. So prices come down. Prices come down. We just miss this area here. With this demand zone, prices don't quite come into it, but you can see that it's reacted off of a larger area of demand. Then we come down into here, right? So this was, so I should really get rid of this one here because that was violated, right? So then we come down into this area here, right? And then kind of break through, we react to it, right? So this would have been the first area to look, because we don't know, again, prices may range between this low and this high, right? Now we can keep going forward. Not sure whether it'll work or not, because we don't know, again, what was happening around here, fundamental sentiment, you know, what was driving price. Then we come down, delete that into this area here. Now again, this is going to be our next area where prices could range from. Prices do react, right? We get a little reaction here. Again, what we want to do is delete this. Now prices could range between this low and this high. Let's see what happens. We get a reaction. Prices kind of break through to the next demand zone. And again, this is not to say that you should be using this solely, in this method solely. We're just identifying an area, potential areas of value. And if you look at, you know, from a daily perspective, even if you were buying, and let's go back, right, buying at this area, and you saw price action, price went from 107 to 108, you know, 30. So there was still at least 130 pips within this this bounce here. But again, it's not about trying to justify you know, buying in this area just solely using the value range tool. This is more to do with looking at the overall pictures, right, of where we are looking to buy if we feel that this is an area of value, right? So again, what we would do is, once prices break down, delete that. Now we're into this area of potential demand, and we're way below this fair value area, and then we start to react from here. Now let's go a bit further, right? Now again, you're buying at a level of demand below fair value, right? Now let's say, for example, you want to try to get in, right? Again, right, so you've taken profit, and you want to try and jump back in. So we know again that this is the strongest area of demand, and this is an area now where prices may want to range from between this high and fair value. But again, we don't have any demand, right, or demand zone created, right? In fact, as a matter of fact, we had this level here, demand, right? And this is because we had prices take out levels of what would have been supply, create a higher low, and a higher high, right? So then this would have became your first area of demand. Prices do come down into this area here. Know that you're basically buying just above fair value, right? And prices do react. Prices react again, and then we kind of take out this demand zone here. So moving forward, so prices are still contained within this range here. We haven't created any new demand at the moment until we create a new high, right? So now what we want to do is always move our value range tool, because we don't know whether prices are going to range between that low and that high. We also got a new demand zone, right? We've got really one around here, and we've got one right here as well. So what we want to do is, as price keeps going higher, let's see if it keeps going higher, right? So let's say around here. So move our value range tool, and then what we want to do is add a value range tool from here to here. Not demand, value range. And also what we want to do is add another value range from potentially from here to here, right? We've got a demand zone created right here. Let's create a higher high. And again, we've got a cluster of fair value right here, right? Fair value zones going on right here. So know that you're buying at fair value, right? Potentially the first area of fair value, but you're also buying at what could potentially be a cheap area if we're looking at this low to this high, and that also becoming a value range, right? So we don't know whether price is going to range between this 1.137 level and its 1.18, so about maybe about 350 pips or so, you know, of value. And again, when we're looking at ranges, we want to look for at least probably about 200 pips as a minimum before we look for a value range. Anything below 200 pips starts to get a bit, you know, I don't necessarily like those types of ranges. I want to see enough pips between where prices could potentially range from. So let's see, you know, what happens. So we're buying at bargain level as well as potential first areas of fair value. Right, we do get a reaction here. Prices don't necessarily react, but now we're coming down into this second area. So once you take that off, we know that we're buying below fair value from 1, 2, 3, 4 areas, coming down into this bargain area, and then we start to react. And now prices, this is going to be now our new value range right here, etc. etc. So sorry about that. Let's we was right here, matter of fact, weren't we? Right, here we go. So this is where you know, we could potentially range from, and this is where we did start to enter a range. And again, we just move up all our value range tools. We've got some demand zones being created. We've got hidden demand right here. It's quite a wide zone. Let's put that on the chart. Also got demand zone, hidden demand right here. Got demand zone there. And then what we want to do is put our value range tool from here to here. From here to here, and from here to here. So we're looking at our first area of value below these areas of fair value. Let's see. Again, keep making new highs. go. New demand zones. Right here. Then we add our value range tool again as we made a new high. So again, we're looking for prices to potentially range between here and here. So let's continue forward. Here we go. Prices come down. Prices didn't react. No problem. Take that level off. Got a cluster of fair value around here. Prices did react slightly, but once we break that, now we don't know whether prices are going to react off of here and range through here, which it does, right? And again, just to reiterate, this is not about, you know, looking at the technical strategy alone as a high win rate. Where your win rate really will come from is fundamentals and sentiment, and understanding really value and deriving value from fundamentals and sentiment analysis, then looking at areas and timing your areas with fundamentals, at areas of demand, right? So we're looking at these areas being fair value, as well as this being a potential area of a bargain, right? And again, you can just keep going forward and so on and so forth, right? So let's look at some supply, right? And see it from the opposite direction. So this is the dollar yen daily chart, right? And what we're going to do is we're going to look to plot levels of supply with and identify value, potential value, using the value range tool from a technical perspective, right? So let's start to identify where we could potentially start to look to get short, right? So let's say it was from around here, right? So let's say, for example, we wanted to look to get short. We thought that the yen was going to strengthen over the US dollar, right? So first things first, what we want to do is look to plot our levels of supply, right? And we've got quite wide zones, to be fair. And then secondly, what we want to do is, from every level of supply, we want to look to potentially, in fact, you know what, I'll drag that back. We want to look to see where we could potentially be, you know, where our value ranges are, right? And where we want to potentially buy, and where prices may want to range from. So this is 1, right? And this is 2. So you can see that when prices came back, right, as prices were making lower highs and lower lows, right, that move right there. As prices pull back, the first area we want to look to get short is this fair value area here, right, within this supply zone. Yes, there was fair value here, but you want to really obviously trade within areas of, you know, supply and demand, right? So this would have been the first area you'd look to try and get short. And again, if you were looking at an odds enhancer, what looks like potentially an area, so I'll use this tool here, confluence of resistance, support, resistance, right? So this would have been potentially your first area to try and get, you know, short with some with an odds enhancer, right? Using support and resistance. So as we go further, this is now, if we understand, this is going to be your absolute expensive area if we're looking at buying the yen, and up here is going to be your cheap areas if you're looking to buy the yen, right? So let's go forward, and we start to, you know, look to range slightly within this fair value area and an expensive area, then we kind of create these new lows, right? So what we're going to do is maybe find a more defined, right? So let's drag potentially, right? And what we have is, as we created, you know, a clear defined new low, we kind of created it here anyway. We've got another level of supply, right? Let's do it from there to there. Supply, right? And then we've also got another one technically right here. So what we also want to do is put our value range tool from that supply zone, right? And also this supply zone. And again, understanding that we need to see at least 200 pips. So we've got, what's that, 114 to 111, 50. Yeah, that's about 250 worth of pips. So yeah, so this value range first would be the area that I'd be looking to get potentially short in, right? Again, just depending on price action, where you are, fundamentals and sentiment, right? But we're just identifying where our first area of, you know, value is, or really fair value as well. Yeah. So this would be the first area you'd be looking to get potentially short. If not, then you'd be looking to potentially get you know, short around here in this area here. So we're at fair value between this high and this low, or we're at a potentially cheap bargain area between this high and this low. So this would be the first area. Prices go through there. So what you want to do is delete that supply, and now we're up into an area, your next area of potential bargain, right? And we're at also some fair value levels as well. So we're beyond, you know, this fair value between this high and this low as well, right? So this is going to be our next cheap area to potentially buy, and prices, you know, react. So prices are now ranging between this area here and this area here, right? And then keep going forward, right? And now we break out, and as we've broken out now, let's delete that. Let's create a new level of supply, and we're going to look for potentially, obviously, our pullback. Right, so this is where prices look like they're pulling back. So as we really are still within, you know, this value range here, we're obviously pulling these value ranges down as well, right? So our first area to try and look to get short at the moment is still going to be up here, because this is where our supply zone is, right? We're not looking to try and get short around an area of fair value if it doesn't coincide with a level of supply, right? So let's keep going forward, and we go lower, right? So let's drag these down, drag that down. And we've also created levels of supply. Now you can draw it like that, or you can basically draw just basically a bigger zone, right? And I want to do it like that just to, you know, for it to be easier on the eye. And let's see if prices start to react. Right, so we also have, as prices start to come up, we got our value range tool from there, VR tool. Again, we know we're buying above fair value if prices are going to range from here to here, right? We've definitely got more than 200 pips range between that high and that low. This would be the first area we'd be looking to try and get short. Prices break above it. We can delete that right there. Prices then come up. Right, they take out this level of demand here. Right, this would have been a level of demand as prices were making higher highs and higher lows. So we take out that level of demand. So now this becomes our level of supply. And let's put in supply. Let's go back to this. Right, so this is our level of supply, and what we're looking for is to try to anticipate potential range. Right, so VR tool, we know that this is our potential range from this high to this low, which prices were contained within, but then we could get a range within a range. So let's see what happens. Right, let me start dragging this down again just to make sure that as we continue to make lower highs and lower lows, supply, and then we've also got a value range, right? So again, this is where we're looking to potentially get and buy above fair value if prices do come up here. This will be the first area, right? Because prices could stay within this range. It's 112, 128 and this 109 level, right? You can see prices did come up into this area above fair value and then reacted. That would have been all right for the lower time frame trade. We come up in here again, right? We take it out, so we delete, get rid of that as well. What we're going to do is move that down here now and understand again that we're buying levels of supply. We're above fair value. Right, so prices are now contained within, or looking to be contained between this high and this low. And so on and so forth. And what we're doing again is just looking for supply zones, right, within these ranges, because price could still want to range within this range. Sorry. Right, and then we're looking at supply zones from here. Got a supply zone there. Got one here. We had one from here, right? And what we would do is if you did want to, you know, get rid of some of these supply, you know, the clutter on this chart, because it can get potentially cluttered if you do, you know, put too much value ranges on there, right? You know, we can kind of delete a few if you wanted to, but again, just keep in mind that these areas here are the best areas to obviously buy, where supply and demand traders, taking into account the bigger picture, right? So from this high to this low, if you are buying, just keep in mind that you are buying at potentially the lows. And when I say buying, I mean you're buying the Japanese yen, you're shorting around you know, retail prices in this overall picture. So maybe what you might want to do is look to maybe you know, half your position size, your normal position size, If you were looking at, obviously, shorting around here, looking at between this high and this low, which is around more than 200 pips, which is fine again. So again, just looking at the overall picture, supply zones, value range tools, understanding where you are potentially is what the aim of this exercise is, right? So I hope this helps. Please email me at info@trading180.com if you have any questions, and take care.